Two people, same goal, completely different results. Person A starts investing at 25, just $500 a month, nothing fancy. Person B waits until 35, then invests $1,500 every single month, 3 times more, every month. Who wins? Most people say person B. Easily, they're wrong. And understanding why could completely change the way you think about money forever. Because money doesn't grow the way most people think it does. At first, it barely moves. You invest, you wait, nothing looks different. And then, quietly, without warning, it starts moving fast. Faster than your contributions, faster than your salary, faster than you expected. That's compounding, and most people discover its power too late.
Meet Alex and Ryan. Alex starts investing at 25. No crypto gambling, no luxury flexing, no get-rich-quick obsession. He just invests $500 every month into a simple index fund, automatically. Meanwhile, Ryan spends his 20s doing what most people do. I'll start when I earn more. I still have time. I want to enjoy life first. Sounds reasonable, right?
At 25, most people are dealing with rent, student debt, career pressure, credit card bills, and trying to afford a vacation once a year. Retirement feels fake, like a problem for some future version of yourself. So Ryan waits. At 35, he finally gets serious. Now he has a higher income, more discipline, and more financial knowledge. He invests $1,500 every month, 3 times more than Alex. He should catch up quickly. He doesn't. And here's why. Investing doesn't reward intensity. It rewards time. Humans naturally think in straight lines. We think, if I invest 3 times more money, I should get 3 times more results. But compounding isn't linear. It's a snowball rolling downhill, tiny at first, almost embarrassing, then suddenly unstoppable. And this is exactly why investing feels frustrating in the beginning, because the early years barely look life-changing. You invest every month, and your portfolio still feels small. Your brain says, why am I even doing this? This is where most people quit. Not because investing doesn't work, because it looks like it doesn't. The real trap is psychological. We live in a world designed for instant rewards. Scroll, click, deliver, done. Everything around us trains short-term thinking. But compounding is the opposite. It's slow, invisible, boring. And that's exactly why it works. Because very few people stay patient long enough to experience the payoff. They panic during crashes. They chase trends. They stop investing, then restart again later. It's like digging for gold, then quitting 3 feet before finding it. Meanwhile, the patient investor quietly keeps going, and eventually, time does the heavy lifting. Now here's the crazy part most people don't expect. Eventually, your investments start growing faster than your contributions. Read that again. There comes a point where your money starts working harder than you are. That's the real dream people are chasing. Not luxury cars, not looking rich online. Freedom. The ability to stop trading every hour of your life for money. And ironically, the people who reach that freedom fastest are usually not the people making the most money. They are the people who started earlier. In fact, by retirement, Alex could still end up with hundreds of thousands of dollars more than Ryan, despite investing far less every month. That's the insane power of starting early. And this is why a teacher investing consistently can outperform a high-income professional who starts late. Income matters, but behavior matters more, and time matters most. Now here's another thing people miss. When you start investing young, you don't just build money, you build identity. The person who invests every month starts seeing themselves differently. They become someone who plans ahead, thinks long-term, and delays gratification. And that identity compounds too. Because once someone sees themselves as good with money, their behavior changes automatically. They spend differently, they save differently, they think differently. Meanwhile, the person who delays investing stays reactive, always catching up, always restarting, always feeling behind. That's why personal finance is less about math and more about psychology. The math is simple. Spend less than you earn. Invest consistently. Don't stop. The hard part is patience, because patience feels boring, but boring is usually where wealth is built. The biggest advantage of starting early isn't higher returns, it's lower pressure. Someone who starts at 25 has room for mistakes, bad years, market crashes, slow progress, life happening. Someone who starts at 45 has far less room for error. That pressure creates emotional decisions, and emotional decisions destroy compounding. This is why early investors don't need to be geniuses. They don't need perfect stock picks. They don't need insane risk. They don't need to predict the future. They just need consistency. And consistency beats brilliance almost every time. That should actually feel encouraging, because it means ordinary people can win too. You don't need to become rich overnight. You just need to stop underestimating time. Because the earlier you start, the less money you actually need to invest later. That's the paradox. Starting small early often beats starting big late. And that's why the biggest financial mistake usually isn't choosing the wrong investment. It's waiting for the perfect salary, waiting to feel confident, waiting for the perfect timing, waiting until life feels stable. Meanwhile, compounding quietly rewards the people who simply started, even imperfectly, even small. So if you're young and thinking, I can start later, remember this: the most valuable money you'll ever invest is probably the first money you invest. Not because it's bigger, but because it gets the longest time to grow. And if you feel like you're already late, don't panic. The lesson here isn't guilt, it's awareness. Because the second best time to start is now. So plant the tree, because one day you'll look back and realize your money was quietly growing in the background the entire time. Slow at first, then impossible to ignore.